how you can pay zero taxes by investing in an opportunity zone. And I'm going to show you the secret to that. Zero, yes, zero in taxes, and you're doing that all legally. So if you're tired of Uncle Sam taking all your money, you gotta watch this video. But you gotta watch it to the end and then execute on the information. Because without execution, it's just information that doesn't go anywhere. So yes, we gotta be political for a second. In 2017, a law was passed by Congress where they created almost 9,000 opportunity zones. These are distressed, dilapidated properties where investors can receive major tax benefits while reinvesting capital gains. Basically means buying houses that's in the hood. And you know what? It stopped when President Trump, or former President Trump at that time, got knocked out the White House. When Biden came in, no more opportunity zone. But my friends, the big beautiful bill changed it all. Now we can do an opportunity zone. So we're gonna talk about step by step how to make money with opportunity zone. Well, the first thing you have to do, you have to find a dilapidated property. It has to be in an urban area that is going through gentrification. We all know gentrification, right? People that don't look like us, walking their dogs, having a good time. That's a gentrified area. I thought to myself years ago, why is this happening? Why is people coming into neighborhoods that don't look like them? Well, my friends, it is a huge tax break. Think about having a property, buying for what? $5,000, $10,000, $20,000 to a land bank, doing remodeling that you're not paying for because you get a loan. So it's a tax deduction for $40,000, $50,000. All in, you can be $80,000 in a house and you just hold it and rent it out. Month after month after month, you get cash flow and you hold it for 10 years. And then 10 years you sell it. And all the money that you make, you don't pay taxes on. That, my friends, is an opportunity zone at its finest. You buy the dilapidated property. That by itself, not good enough. You have to make sure all the money in that account that goes to that dilapidated property is separate. So if I sell a stock, I can't use my brokerage account to go towards opportunity zone. I have to open up my own separate account. That's a mistake that people make. Number two, we also have to make sure we have our own separate LLC. You can't have an opportunity zone just in your name. That won't work either. Having your own LLC that is earmarked for opportunity zone goes a long way. But it doesn't stop there, because then the gains of that investment that we sold put into that account is the third step. You can't use your own money. You have to use money that was made from a gain of an investment. Step number 4, and this is the most crucial part. After you buy that property, you have 18 months. 18 months, not 6 months, not 9 months, not 24 months. You have a year and a half to put improvements into that property. Now those improvements have to equal or be more than the actual price of the property. So if I buy a $20,000 property, I have to put at least $21,000 into that property. 18 months of that. Then, my friends, the magic starts. Because all the money that we spent to rehab and to buy it, that is a tax deduction. And now when we rent out that property, we're making more money, more money, more money. As it grows, guess what happens? IRS says, you know what? You don't gotta pay any tax on the appreciation of that capital. You don't gotta pay no taxes on it when the money grows, no. As long as you hold it for 10 years. And once we hit that 10-year mark, guess what? We can sell it. And once we sell it, whatever we make, we don't pay taxes. No taxes legally, because you went through that step by step framework of having an opportunity zone. Now, this is not just banter like what is hypotheticals. Your boy, your favorite certified financial planner, right now are going through the process of having an opportunity zone in Pittsburgh. Now, I'm a Cincinnati Bengals fan. I'm not a Steelers fan, but I say that to say, if you find a property in a dilapidated area and go through those steps, as you're getting rental income, you're pocketing the money, and 10 years later when you sell it, you don't pay the capital gains. And who likes paying taxes? I know I don't. If you want specific strategies that's gonna allow you to decrease your tax liability while increasing your net worth, click a link in the description and we'll give you a personalized roadmap to success, how you can use tax strategies like this and others that'll decrease your tax liability, but more importantly, increase your net worth. Because we all have the same rules. How are you gonna apply those rules to the game? Let's make some pain forward painless profits together, y'all. Peace.